Uh, I'm Sam. Hold on a second. Recorded. Got it. Okay. Sorry. Hi, everyone. How are you? I'm Sam Thompson. I'm the broker and owner of Thompson Real Estate Team. So thanks for joining us. We're just putting on this webinar, Home Buying 1-on-1, How to Buy Your First House. So I'll go over the agenda for the meeting here. All right, so first off, I'm gonna take a couple minutes and introduce myself and a couple of our team members. We'll talk about the Thompson Real Estate Team mission. And then what we're gonna do is we're gonna go over real estate terms and vocabulary, that we use when we're transacting real estate. We will talk about getting prepared to purchase a house, and we'll go over a timeline of what it looks like from the time that you start home shopping to the time that you close on a property. And then we'll go over steps in the home buying process. I think somebody might have joined with their mic on. No? Okay, I think we're good. Sam's favorite brother, of course. All right. All right, everyone, so welcome. So again, my name is Sam Thompson. I'm the broker and owner of Thompson Real Estate Team. So I started Thompson Real Estate Team about 3 or 4 years ago. This is what I do full time. So I've been in real estate for probably about 8 years. And just to kind of preface this whole meeting, when I talk about the steps in a real estate transaction, I want it to be clear to everyone that I'm talking specifically about how we do it in the capital region of New York. So although a lot of these terms are probably interchangeable, you'll see them, probably a lot of them across the nation in real estate transactions. The way I'm speaking about it is specific to our market, just so that's clear to everyone. But yeah, a little bit about myself. I graduated from Concordia University in Montreal. I got a degree in political science with a minor in philosophy. And so, of course, what do you do with a political science degree? You start a real estate company, right? So I really enjoy what I do, and I'm excited to share some of this information with you guys. So some of my team members are not here tonight. I'll introduce some of those who are here. So Tracy's my mother. She joined the company probably about 6 months ago or so. She's a licensed real estate salesperson. So she's here with us tonight. I don't know if you want to say a couple of things, Tracy.
Hi, everybody. I'm glad to be here tonight. So happy that you guys are all here. I'm keeping myself mute because I have my dogs with me, but I'm glad to be here, and I'm excited about starting this series of webinars for everyone. Thanks.
Awesome. Thank you. Yeah. And just another note, guys, we're going to be recording this webinar, and we're going to be posting it on our website, so it'll be accessible, and we'll share the link to the people here. And we're also going to be continuing these meetings every month. So we may change topics over time, but probably for the next 2 months, we're going to focus specifically on how to buy your first house. We're just going to run this sort of episode for a couple months. And so then I've got my brother, Hayden Thompson. Hayden's a licensed real estate salesperson. So Hayden, if you want to say hello.
Hey, how you doing, guys? Good to be here. I see some familiar faces. What's up, Max and Ian? How you guys doing?
Good, Hayden. How's it going?
Good, man. Good to see you, bud.
Good to see you.
What's up, H? Hope all's well, my man.
Good to see everyone here.
Awesome. All right, so we can keep going.
Ian didn't introduce himself.
Oh, sorry, Ian. I forgot you were here. I didn't see that. Ian Ross is a licensed real estate salesperson with our company. Ian, if you'd like to say hello.
Hey, how you guys doing tonight? Nice to meet all of you guys, and hope we have a good meeting.
Thank you, Ian. Appreciate that. All right, awesome. So the mission of the Thompson Real Estate Team is to provide our community with the knowledge and expertise to make informed and intelligent real estate decisions. So one of the things for me personally that's the most gratifying thing that I do is actually helping people find their home, right? So a lot of folks that I work with are first-time home buyers that might not be familiar with, real estate and the lingo and the process and everything. So, it's really gratifying for me when I meet people like that. Sometimes people that haven't even considered home ownership, and I get the opportunity to share what I know with them and then actually, get them into home ownership, obviously, which is just such a great thing. So that's the mission statement of our company. And that's why we're going to start to do some things like this webinar. It's just, get this information out and yeah. Oh yeah, next. Great. And so guys, we're going to get started. I want to kind of move quickly, but I also kind of want to take my time. So, if you have, we're going to do a Q&A at the end of all of this. If you have questions, you'll have an opportunity to ask them at the end of the meeting. But also if you think of something as I'm speaking, feel free to type it in the chat box. And then at the end of the meeting, I'll hit all those questions in the order that they came, and then I'll give everybody a chance if they have any questions to ask questions. So, so the first thing I want to talk about is mortgage, right? What is a mortgage? So essentially, what a mortgage is it's a loan, right? It's a loan that people use to purchase real estate. So there's different types of mortgages. Commonly, there's the FHA mortgage, VA mortgage, there's conventional mortgages, and there's a slew of other mortgage products. So essentially, when you're looking at purchasing a property and you see a price tag of like $200,000, you think, well, how do people pay for something like that, right? Most people walking around don't have $200,000 in their, in their wallet to put down on this property. So what people generally do is they use a mortgage. And so there's different companies that offer mortgages to buyers. You have mortgage brokers, and you have institutions like, your local bank that may have a mortgage division, right? And so when you start thinking about purchasing a property, you'll want to think about what type of mortgage should I go for? And so mortgage brokers and lenders like banks or credit unions are people that you're going to want to reach out to. They'll take a look at your financial situation, they'll consult with you, and kind of help you figure out what the right mortgage product is for you. So that's what a mortgage is. So then your down payment. So when you use a mortgage, you'll have a certain amount of a down payment, right? So when we talk about loan to value, which is the next term there, basically imagine that I have a property for $100,000 and I want to purchase this property, and I have a mortgage that's going to be 5% down mortgage. So basically what that means is I'm going to need to have a $5,000 down payment, and then I'm going to be, loaned the remaining $95,000. That's going to be, the principal amount of my mortgage. So the down payment is going to be, what are you bringing to the table versus what is your lender bringing? And usually, like I said, that's in a percentage, right? So sometimes it's 20% down, 10% down, 5% down, 3% down. So that's your down payment. All right. So loan to value. So again, imagine you have a $100,000 property, and the bank is going to finance 95% of that, and you're going to do a 5% down payment. You're going to bring 5% of the money to the value to purchase that property. So loan to value would be 95% in that situation. So 95% of the loan to value. So you'd think 5/95, or 80/20 loan, or a 90/10 loan. So that's just a percentage of how much of this purchase price is being financed by the lender. So then you've got your interest rate. So basically, when an institution gives you a loan, there's going to be an interest rate, which is going to be money that they're making off the principal amount of the loan that they give to you. So essentially, if you've got a $95,000 loan, using those easy numbers with a $100,000 purchase, there's going to be maybe a 3% interest rate on that $95,000. And so different mortgage products, and depending on sort of what the prevailing rates are, what's being offered on the market, that's going to determine what your interest rate is. So when you start shopping around, I mean, obviously people want to get lower interest rates, right? If you've ever heard people talk about money is cheap or money is expensive, they're referring to interest rates. So for example, I know my mom told me that when she was purchasing a house back in the 80s, you would have like 18, 17% interest rates on mortgages. Today, they're around like 3 or 4%. So you could say that money is cheap right now. But basically that's how the lending institution makes money off of the money that they loan to you to purchase that property. Sorry. All right, so then property taxes. So when you're trying to figure out what you're going to be spending each month or annually to live in a property that you own, you're going to want to take a look at what are the property taxes, right? So depending on where you live, the annual property taxes can vary. Typically, you'll pay school taxes on a piece of real estate. You'll pay school taxes, and then either county taxes or city taxes or village taxes, right? But combined, those all constitute your property taxes. And so again, if you are purchasing a property for $100,000 and say there's two properties and one has $5,000 in annual property taxes, the other has $10,000 in annual property taxes, well, you're going to be spending $5,000 more a year to live in, property B, right? So that's a consideration you're going to want to make when you start looking at different areas and looking for properties is how much are my property taxes? And, taxes are something that you really can't do anything about. You have control over, the mortgage amount on the property, but your taxes is just going to be money that just goes away, right? So people pretty much hate taxes, obviously, right? But that's something you're going to want to consider. And then, so the next thing, PITI. So that's principal, interest, taxes, and insurance. And so that acronym PITI essentially constitutes what your monthly payment is going to be made of. So you've got your principal and your interest on your mortgage payment. You've got your property taxes, which most times you'll pay monthly installments. So, just to use easy numbers, say annually the property taxes are $6,000, you can expect that you'll pay $500 a month for those property taxes, in addition to your mortgage and your insurance. So, principal, interest, taxes, and then insurance. So your home insurance. So, those are basically the figures that you're going to want to have in your head, just so you know what's my monthly payment on this property going to be. So then we have pre-approval versus pre-qual. So what we're talking about there is when you start thinking about purchasing a property, you're going to talk to that lender, right? You're going to talk to a lender and figure out, hey, take a look at my financials, consult with me. What can I afford to spend? And there's basically two types of, pre-qualifications that lenders offer to buyers. One is a pre-qualification letter. The other is a pre-approval letter. So think about it this way. If you reach out to a lender tomorrow, you spend 20 minutes on the phone, and they issue you a pre-qual, that pre-qual is going to say, I talked to, from the lender. So ABC Lending, I spoke to John Doe based on his financials. He qualifies for, X amount of financing. And sometimes just the pre-qual, because it's really just a surface level, they'll probably pull your credit and they'll probably look at, some basic income information. Well, sometimes they're not as effective as that pre-approval. And so I've had people that I know that, call a lender, they don't really know the person, they give them a pre-qual, and then they go and they get a real estate agent. They start moving through the process of purchasing that property. They're spending money, they're getting excited. And then, once it gets to the point where the lender really does that deep dive and looks into their financial situation, they say, oh, wait a second, there's red flags all over this. We can't loan you this money, right? It just happened to a friend of mine. And so that's the difference between a pre-qual and a pre-approval. A pre-approval is that lender does that deep dive initially and they issue you a pre-approval. So we work closely with the lender, ClearPath Mortgage Solutions. They only issue pre-approvals. And sometimes it takes them a little bit longer to generate that versus a pre-qual letter. Like you might be able to have a 20-minute phone call and get that pre-qual, go home shopping, great. But it's really worth the upfront time investment just to, have that conversation with that lender, take that deep dive into your finances, get pre-approved. And then, that's one less thing you're going to have to worry about while you're trying to purchase this property. Okay, so the next thing is going to be earnest money. So we're talking about a deposit there. So essentially, once you find a property that you're interested in, you make that offer, you consult with your real estate agent, make an offer on that property, you're going to have an earnest money deposit or a deposit that you're going to put down, right? And so, so basically, let's say, again, let's go back to the $100,000 property. So I've got a $100,000 property. I'm going to do 5% down. I do $1,000 deposit. Well, that $1,000 deposit, excuse me, is going to be credited to you towards your down payment at closing. So now you only owe the $5,000 when you close. And so, the deposit acts as a vote of your confidence in purchasing the property. And there's certain situations in which, if you don't complete the transaction, you don't do the things you're supposed to do, you could lose that deposit to the seller. And then there's certain situations where if something comes up, you could get that deposit back, right? So that's what an earnest money deposit is. So then real estate agents, right? So what do real estate agents do? So when you're looking to purchase a property, one of the first things that you want to do is find a real estate agent. And as a buyer's agent, what that person is going to do is they're basically, they're going to be someone that's in your corner throughout the life of your real estate transaction. So they're going to consult with you. They're going to take you out to look at properties. They're going to represent your interests when you're under contract for a property purchase. So their job is to be with you every step of the way and to support you and look out for your best interests throughout that process. So, it's typically purchasing real estate is going to be the biggest purchase that, anybody makes in their life. So it's very important, and it's important that you take the time to find a qualified real estate agent that has integrity and is trustworthy and has experience, because really the barrier to entry to be a real estate agent is not that high, right? It's like $300 course and then pass the state exam. And, you could wind up talking to this person on the phone and then, maybe they don't know what they're doing, right? So you really want to look for someone that, has great experience, someone that you trust, someone that's got a great broker that can support them and support you in your transaction. And so, yeah, that's basically what a buyer's agent does. And then obviously, so the person that's listed the property for sale will typically have a seller's agent, and they'll act in the same capacity for that seller as that buyer would for you. So those are sort of buyer and seller agents. Another thing to note is, how is a buyer's agent compensated, right? So if you go out and you try to find a real estate agent to represent you as a buyer, you don't actually pay that agent to go out and represent you and do that job and fulfill that role. That their commission is actually paid by the seller of the property. So essentially, when the listing agent, when the seller's agent lists that seller's property on the market, they'll have an agreement with the seller. Hey, I'm going to charge you, 6% commission, and I'm going to split that commission with the buyer's agent. So I'll list the property, put it on the market, and then if an agent brings a buyer, I'll split that commission with them. So, effectively as a buyer, you're not like paying your real estate agent out of pocket. All right, so what is an appraisal? So, as you're moving through this real estate transaction, one of the things that you're going to be doing is getting an appraisal. And effectively what an appraisal is that lender, that lending institution, again, whether it be a broker or a credit union or whatever, they're going to send out a a third party to go and look at that property and make sure that the dollar amount that you're offering for that property is equal to the value. And they determine that by, physically going out to the property, inspecting the property, bringing a report back to their office, and then looking at comparable properties. And effectively, the appraiser's job is just to inform the lender that, hey, John buyer is not spending $100,000 more on this property than it's actually worth, right? Because the lender's taking a risk on John, and they want to make sure that if John doesn't make his mortgage payment, that they haven't just loaned out way more than the property's worth, and now they can't sell this property and they've lost money. So that's the role of an appraiser, is basically they just want to go and make sure that the dollar amount that you're offering for the property is really close to the value of that property. So then an inspection. So again, you're purchasing a piece of real estate, you should have an inspection done, right? I recommend all my clients to get a New York State licensed inspector to come out to the property and poke around at everything, make sure all the water's running, make sure that the heat's working in the property, take a look at the roof, take a look at the attic, take a look at the foundation. So really important thing. And what they'll do essentially, you want to hire a really great inspector. They'll go to the property and then they will send you a detailed report, which essentially will be a snapshot of the current state of that property, right? So it's kind of, in a way, it's like insurance for you as a buyer, because you can look at that report and say, okay, item 1 has to be taken care of right away. Item 2, I could probably get away with for a year or two. I might need to do a new roof in 10 years, right? So this is a really, really important information for you to have as a buyer, so that, you're informed on the piece of property that you're purchasing. Okay, so title search. So what a title search is basically is the attorneys are going to do what's called a title search, and they're going to look through the history of ownership on a given property, and they're going to try to determine, does anybody else claim to have any ownership interest in this property. So it's really important to do a title search, because it's oftentimes it'll pull up really old mortgages that maybe haven't been discharged. It's very common, right? And so what they'll do is they'll make sure, hey, we see that there's a mortgage here from Wells Fargo from 1975. Seller, can you please, seller's agent or seller's attorney, can you please make sure that we get that payoff letter, that we get that discharged? Because when you purchase that property, you want to make darn sure that you're the only person that owns that property. So that's effectively what a title search does. Just make sure that, you're buying this and you're going to be the one that owns it. Excuse me. Okay, so then what does an attorney do, right? So you're going to use an attorney in a real estate transaction to represent your interests, from a legal perspective during the course of that transaction. So when you have when you fill out an offer, that offer is actually it's a contract, right? And so your attorney is going to represent your interests and make sure that the seller is doing the things that they need to do, and that you as the buyer are doing the things that you need to do. And the attorney will corroborate with the seller's attorney and also the real estate agents, just to make sure that things are happening the way that they're supposed to do too. So then the attorney approval, so that's one of the first stages in the real estate contract, at least in our area. So basically, say you're going out and you find a property and you make an offer, and then the seller accepts that offer. That actually doesn't really mean anything until you get attorney approval. So that's one of the first things we do in the contract, is we'll say, hey, once the buyer and seller agree to this transaction, we need to get our attorney approval done, where the buyer's attorney and the seller's attorney are going to come together, review the contract, make sure that their party's interests are represented, and sign off on that. And then once you get that attorney approval, that contract is actually binding, right? So people have a tendency where, hey, we got our offer accepted, let's celebrate, right? It actually is not binding. It really doesn't mean anything until you have that attorney approval. So very important initial thing that we do, when we're transacting real estate. And then the last term and definition I want to talk about is closing costs, right? So we all pretty much have an idea of what closing means. That's, we've done all this, stuff, and, everything's right. The title search is back, the property's appraised, we have our mortgage. So let's close. And then, you come in as the buyer, you put some money down, you sign some papers, and you walk away with your keys. But I want to mention closing costs too. So we talked about the down payment, right? So if we go back to our example of the $100,000 property with a 5% down payment, well, you're going to pay more than $5,000 to purchase that property because you're going to have some closing costs. And so your lender will be able to discuss more specifically with you what your closing costs are going to be. But just to give you an idea, your closing costs can be your attorney's fee. So you don't have to necessarily pay your attorney as soon as they start working for you. You can wait till that property closes and then pay your attorney their fee. Recording fees, transfer tax. Typically lenders will ask that you pay, a year's worth of home insurance. Sometimes they want to see a year's worth of property taxes escrowed. So it's your closing costs are going to have a lot to do with the type of mortgage product that you're using. And so I would just say, when you start talking to lenders, that's something that's going to be really important for you to know in speaking with your lender, is saying, hey, listen, I know this is a 5% down mortgage. So I know that that's going to be 5% of the purchase price at least that I'm going to be paying. What am I, going to be looking at as far as closing costs, right? So really important thing to be aware of there. All right, we can go to the next one. I just talked so much. I'm not used to that. Okay, so preparing to purchase a home. So, interviewing and selecting a real estate agent. Again, some of the things you can do, you can talk to your family, talk to your friends, see, who do you guys know that is trustworthy? A lot of people, have really close relations that are real estate agents, right? But what you're really looking for in a real estate agent is, you're looking for someone that's got, that's responsive. First of all, really important. You need somebody that's going to be responsive, because most people that purchase real estate, they haven't done like a course like that. They don't really know like what's happening, right? So they're totally reliant on their agent and their attorney. And, attorneys are often extremely busy, and agents are often extremely busy too. So good on all you guys for coming and trying to, get some of this information. But, so you're really just, you're looking for someone that's got integrity, trustworthiness. You can look at their Google reviews, somebody that you genuinely like, somebody that and somebody that you trust. So, and again, like I said, Google reviews, you can call that agent, you can call around and you can just say, hey, I've heard your name thrown around and I just wanted to take a couple minutes and talk to you and, get a feel for the person, right? So that would be my first recommendation, because a good real estate agent is going to, they can really make a big difference in the transaction for you. And they can also help guide you through the whole process, from recommending lenders and recommending inspectors and attorneys and so on and so forth. So, there is a difference depending on which agent you use and potentially how that transaction might pan out for you. So interview and select an agent. And then you want to think about, what's my budget, right? So there's the 28% rule, or, where basically you should be spending 28% or less of your income on your housing, right? So, if you think about, well, what am I earning every month, and, how much do I want to spend? I don't really want to go over like 1/3, right? So you can kind of work back from, what do I want my monthly payment to be? And what would that equate to in a mortgage? Bearing in mind that property taxes are going to make a big impact on that, right? Because again, you can have a property with $5,000 annual property taxes, and then another property with $11,000 in annual property taxes, and you're going to be spending $6,000 more per month right? So how much mortgage is that? How much purchase price is that difference, right? So again, where you buy and what the taxes are there, it's going to have a major impact on what's my monthly payment on this property. And also what kind of mortgage am I using and how much am I spending and so on and so forth. But something to think about is working backwards from what do I want my monthly payment to be, and then figuring out, how much of a purchase price could I realistically be at. So then, you've talked to an agent, you've thought about your budget, and the next thing you can do is call around to different lenders. Something that's I think a lot of people might not know is when you're shopping rates, whether it's automobile or lenders for homes or whatever it is, when they do a credit pull on you, you have a certain time period to get multiple credit pulls, and it won't affect your credit like that. We all know that hard credit pulls can have a negative impact on your credit, but they want to make sure that, that if you're looking and shopping rates, that, going to multiple sources to figure out who's got the best rates doesn't negatively impact your credit. So that's something I should probably be able to tell you more about right now. You can probably find this online, but basically what I'm trying to say is don't be too concerned, and do some of your own research about if you're calling a bunch of lenders and they're all pulling your credit. That's not supposed to negatively impact that. Each one of those pulls is not supposed to be like an individual, hard pull on your credit. You're supposed to have a time frame like 45 days where you can do multiple hits, because the credit bureaus understand your shopping interest rates, right? So you can call around different lenders. Hey, let's have a conversation. What kind of mortgage do you think is right for me? What can you offer me? What are your rates, right? And typically a lower interest rate is better, right? Because it means you're spending less money on the money that you're receiving from the lender. So then again, another little plug for the local mortgage lender that we work with, that's ClearPath Mortgage Solutions. So they're really fantastic. They do the pre-approval upfront, and they're just like good people. Like I've talked and worked with all of them, and they're just like real people who will take a little bit of time and have a conversation with you. And a lot of my experience with lenders a lot of times has been like, they just kind of want to like, okay, yep, bye, But these guys, they're like real humans, right? So again, just a plug. That's who I recommend most often to my clients is ClearPath Mortgage Solutions. All right, so then the next step, again, get that pre-approval. So you get your pre-approval letter, you've got your real estate agent. So you're in great shape. So now it's time to go shopping, right? And then when we talk about finding an attorney, right? So once you put that property under contract, once you make your offer, actually right when you make your offer, it's best to be able to write in the attorney that you're going to use. So again, you can talk to your real estate agent and say, hey, do you have any recommendations for an attorney for me to use? You can talk to your family or friends. Maybe you have a relative that's an attorney that's, happy to do it for a good rate for you. And then same thing with attorneys. You call around and say, hey, I'm going to be purchasing a piece of real estate. I just want to know what your rates are for your services in representing me in a real estate transaction, right? So yeah, again, so once we make that offer, we're going to write your attorney's information into that offer so that once it's accepted, we can send it to them right away to try to get that attorney approval. And then one other thing I'll mention too is if you go to our website, it's www.tret.pro, and we have a list of local vendors that we recommend that we've worked with that have, that offer excellent customer service. So that's all on our website, www.tret.pro, TRET.pro. So, you've gotten all this stuff done. Now it's time to go shopping. Work with your agent about what are my must-haves, what are my likes, what do I not want, and just have that open dialogue with your agent. And you should be able to communicate with your agent and tell them, are there things, what do I like, what do I not like? And you should feel comfortable if your agent spends all day with you and you don't see a thing that you like. It's just, I didn't like anything today, that should be fine. So it's really important that you feel like you've got a good line of communication with the agent that you choose to work with. Okay, so now we're going to talk about the timeline and the process of purchasing a property. So we got into it a little bit, but basically, once you start doing your home shopping and you find something that you like, you're going to consult with your real estate agent. Your real estate agent will draft an offer up for that property, and then they'll submit that offer to the listing agent. The listing agent will share it and consult with the seller. The seller accepts the offer, fantastic. So, and then it says here, acceptance 24 hours. So typically as a buyer's agent, when I write an offer, I'm going to say, hey, here's our offer, $100,000, and we need an answer by tomorrow at 5 p.m., right? Because, you want to get that property wrapped up for your client. They want the property. We don't want anybody else coming in and making offers. So, let's get that acceptance in 24 hours. So then the first stage, right? So in the real estate contract, you have these things called contingencies, right? And the contingencies basically represent different stages in the transaction. So the first contingency is going to be the attorney approval. And that's something you're going to want to get done generally 3 business days after the contract has been accepted. And so again, that attorney approval is when the buyer's attorney and the seller's attorney, they're going to review that contract, make sure it's mutually agreeable, and they're going to sign off on it. And now the contract is binding, right? So that's the first step, really important step. So then the second thing is, once you've got your offer accepted, your agent is going to send that offer not only to your attorney, but also to your lender. Make sure that the lender sees that you're engaged in a real estate transaction, that you're going to be purchasing a property, which property for what amount, right? And then you're going to begin the process of your actual mortgage application. So you've gotten your pre-approval done. Now you've got a property under contract. So now you're going to be in communication with the lender, and they're going to be saying, hey, we need some paperwork. We need to do a credit pull. We need to make sure we're talking to you. So they're going to be working on your mortgage application, throughout this process. So then the next thing you're going to do, again, this will be represented by a date. It's a contingency, the inspection contingency. There'll be a deadline to it. And the inspection contingency is basically saying, hey, I, the buyer, I'm going to, have my inspection done, by this date, right? Usually like 3 weeks or so after the contract's been accepted. And that's, your deadline to get your inspector in so they can look through, write up a report. And oftentimes, with these properties, a lot of these properties are over 100 years old, right? So a lot of times the inspections do turn up some issues. And oftentimes this will be, a period in the transaction that we may have some negotiating to do. Hey, we found this issue, seller, are you going to be able to credit the buyer so that they can repair it when they close on the property? Will you reduce the purchase price? Will you repair it yourself? And then allow us to come back in before we close so we can make sure the problem is fixed. So, so those are some of the things that can come up during the inspection contingency. And the other thing is, if you have a major issue, right, something that you went through with your agent, you looked at the property and you didn't notice right away, but it turns out there's a $30,000 foundation problem, right? Then you can say, well, we have a major issue here. We're backing out and we'd like our deposit back, right? There's a threshold that's written into our contracts that essentially says that if there's a repair item that's $1,500 or more, it's considered a major. And anything that meets that threshold, the buyer should be able to get their deposit back and walk away. So then the next thing is going to be the appraisal. And that's when we've gotten through, these beginning stages, our inspections are done. Okay, great. Buyer, pay for and order the appraisal, right? So the buyer will pay for that appraiser to come out to the property, and that's all done through the lender. The lender will contact the appraiser. Usually they'll take your payment, apply it to the appraisal company. The appraisal company will send somebody out, and and that person will go through and they'll just inspect the property. They'll look at other comparable properties and make sure that the property that you're purchasing is, you're purchasing it for a price that's close to or equal to the actual value of that property. One other thing just to note is, typically as a buyer, you'll attend the inspection. You'll go and sort of like shadow the inspector and just, see what they're looking at and talk to them, and they can give you good advice. And typically you won't attend the appraisal. most often the listing agent actually is going to be the one that goes to the appraisal. So then you've got your title search. Again, we talked about that. That's where the attorneys are going to order the title search. They're going to look through the history of ownership on the property, make sure that nobody else has any ownership claim to the property, so that when you close, you're the one that owns it. And then once the title search comes back, and then you can expect to get your mortgage commitment, right? So the bank is now satisfied. Okay, great. This person is in great financial standing. The property is worth what they're offering on it. Nobody else claims to own this property. We can give this person this mortgage, and then they'll issue their mortgage commitment, and then the attorneys they'll issue the clear to close. The attorneys will schedule a time to get together for the closing, and then you're at the closing table making your payment and getting your keys. And so depending on the type of mortgage product that you use, that's going to dictate how long that closing is going to take, right? So I would say right now, if I was to enter into a transaction with a buyer and they were using an FHA loan, I would say most likely that'd be at least a 60-day process. Sometimes conventional loans, those can be 30-day, 45-day turnaround. If somebody does have cash, that can be done even quicker, maybe 30 days, right? So, again, consult with your agent to get a feel for how long the process is going to take, and they should be able to give you a pretty good estimate. Okay, so we'll open it up to questions. I think I saw a few questions come up in the chat, so we'll hit those first. I should be able to view these, I guess, on my screen. Chat, here we go. Okay, so let's go to the top. Do you pay the mortgage broker, Brianna? Great question. So that's one of the differences between mortgage brokers sometimes and institutions, right? So mortgage brokers, one of the things that is advantageous to using a mortgage broker is they might be able to get you access to more and different mortgage products. But I do know that they usually do have a charge, and it's called like points, right? So they may charge some points on your mortgage. So 1 point would represent 1% of the total loan that they're making. So bearing in mind, let's say your mortgage broker is charging 1 point on let's say an $80,000 loan. Let's just say it's a $100,000 purchase. You're putting down 20%. The mortgage broker is getting you financing for $80,000, and they charge 1 point, right? So, so that would be equivalent to $800 that they would charge, and that is usually something that I don't believe that you're paying. I think that's like wrapped into your mortgage. So I don't think it's something you're coming out of pocket to pay the mortgage broker's fee at closing. But I mean, great question, right? Like these are questions that generally, first-time home buyers are not asking. And by all means, when you speak to a mortgage broker or a lender, you say to them, hey, do you charge a fee? Do you charge any points? What are you getting out of this, right? And they'll be able to tell you, and they'll be able to tell you exactly how that works. So really great question. So some of the best questions to ask when interviewing a real estate agent. That's a good question. I think it's really just like getting a feel for the person. You could say to them, you could ask them, hey, what would it look like for me to purchase a property, right? I mean, you want to make pretty darn sure that that person understands the steps that we all just went over that buyers experience in purchasing a piece of real estate, right? So, say, what's the process? Can you describe the process to me? How many houses have you sold? What's your area of expertise? It just, I would say stuff like that. You want to make sure you're working with someone that's experienced, and generally you can get a feel for that based on their online reviews, based on how many properties they've sold. But it's really important, not just that person is competent, but also that they're like a decent person and like they'll respond to you and like they're trustworthy and they have integrity, right? So I would just say that probably the most important things you're looking for, you definitely need someone that's competent and understands the process. But you also want just like a good person, right? You want somebody who's friendly and somebody who you feel like you could get along with and you could trust. You know, trust is really important. All right, so Brianna asks, do we need to find an attorney? Yeah, so, so basically when you start looking around and you've got a real estate agent, you can ask them for inspector referrals, attorney referrals, lender referrals, and they can help you with that. But, like we talked about, as far as finding an attorney, you could call around, you could talk to your family and friends. Hey, I need a real estate attorney. Do you recommend anyone? And then, giving that person a phone call and just saying, hey, I want to know what you charge in order to get me through a transaction. And honestly, do yourself a favor and take 30 minutes and call 3 attorneys and say, what do you charge? And have a conversation, just because, sometimes the attorneys, they have varying fees, right? So, but certainly, your agent can help you find people too. Okay, so let's see, Zane. When appraisal is done, does the value that the appraiser gives include taxes that come along with it? So no, there's kind of 2 separate things. So when we talk about value, we're just talking about what is a property worth. And the property taxes, they don't really play much of a role with the appraiser, with the appraisal process. It's just really, the appraiser is just going to make sure that the property is worth what you're offering on the property. They're really there to determine what is the fair market value of this property. That's what an appraiser does. And then we've got Brianna. What happens if you have a pre-approval, but at the time of applying for the mortgage, the lender does not give them the actual loan? So this is something that, we talked about, right? So you want to do your very best where when you are making that offer, what you can afford, and you want to make sure that the appraisal and the loan is not going to be, well, excuse me, let me back up. You're going to want to make sure that financing is not going to be an issue for you. So that's why it's so important on the front end to try to get a pre-approval versus a pre-qualification. Generally, the pre-qualification is a sort of a surface level look at your situation. Hey, how much money do you make? Oh, I make this much money. But wait a second, we didn't actually look at your pay stubs. We didn't look at your W-2. And so that's something that, lenders that do pre-approvals, they're going to look at that on the front end. So take that time, my recommendation, take that time, work with a lender that's going to issue you a pre-approval, because a pre-approval holds more weight than a pre-qual. And by the way, when a buyer's agent presents an offer to a listing agent, a seller's agent, listing agent and seller's agent are basically interchangeable. They're going to include your pre-qual or pre-approval letter. So they're going to say, hey, John Doe is going to spend $100,000 on this property, and take a look here. We got a letter from Clear Path Mortgage Solutions that says they're pre-approved for this dollar amount, right? So, and it can happen though. Yeah, I mean, it can happen. For example, if you have big changes in your personal financial situation that, were not the case when you were issued that pre-approval, yeah, the deal can fall through. You can maybe forfeit your deposit, maybe not if you're lucky. So sometimes, I mean, real estate deals fall apart. I'm sure we've all had friends and family that, had real estate deals not work out. So that's what can happen. Excuse me. You may have said this already. Who will conduct a title search? Jennifer. Yep. So title search will be done with the attorneys. The attorneys will conduct the title search. I'm pretty sure they hire a title company. Title company does the title search, issues that to the attorneys, and then the attorneys review it and sort of like type it up type of thing. Who contacts the inspector? So the buyer is going to contact the inspector and interview them and hire them and schedule the inspection, right? the agent is going to be helpful with that and let them know when to make that call and when to schedule it for and so forth. But the buyer is going to be doing the legwork on contacting and hiring the inspector. So Jen, is there such thing as a property tax area map? Yeah, basically. So I think what you're asking is there a way that you can look at a tax map, right? And so tax maps are generally public record. For example, if I wanted to look at a tax map of Schenectady, I could go to the Schenectady City website, and I do all the time because I'm a nerd, right? And I go and I look at, you can go to like, property taxes, and they'll have tax maps. And what you'll see is basically areas of the city are going to be broken down into grids. And then there's going to be something called section block lot, that's SBL, right? And that SBL number is going to be a representation of a parcel, a tax parcel, which will be a piece of property in a given area, right? So for example, I used to own a house in Schenectady, and I'm just throwing this number out, but it was in section 45.65, and then block 3 in lot 2. So the number would be 45.65-3-2. And so, that's your SBL number. And yeah, so that, I think that would be basically the tax area map. And taxes, property taxes are public record. So in most places, you can go right online and search what the property taxes are. And then when you're home searching and your agent is sending you properties, you'll typically have it right there on the list, on the listing sheet, where it'll say at the bottom what the taxes are. But you can verify that usually by going online. And then Jennifer's last question is, are property taxes included in a loan? So sometimes they are. Some loans, you'll pay the property taxes separately. Sometimes you'll include the mortgage or the property tax payment in your monthly payment, and then your lender will, or basically whoever's got the mortgage will make that quarterly tax payment. And then, can you get a loan from a different bank than the lender who writes an approval letter? Absolutely. So if you get, let's say ABC Bank says, hey, Jennifer is pre-approved for this much loan, and then you're under contract, probably want to do that pretty quickly. You want to know who's going to be, you're going to want to start your mortgage application pretty quickly. But if you find out that DEF Bank has a 3% interest rate versus a 4, then yeah, you could switch over and you could start your mortgage application with that lender. And obviously you'd want to inform your buyer's agent. And if it was something that needed to be brought up to the listing agent, then they would make sure that was cool. But yeah. All right. So gosh, how long has it been? Let's see. I can't tell what time it is. I'm on my phone here, but I just want to give, first of all, thank you guys very much. I'm not used to just talking straight out like this, but does anybody have any questions that they'd like to ask at all? You can hop on the mic if you want. Chat. You're welcome, Jennifer. Thank you. Well, I hope you guys found that this was valuable, and I'll tell you that most people that that I talk to that come to me and want to buy a house, they're not informed of the process, and that's fine. If you've got a good agent, like, that's fine. But if you're informed of what's actually happening during the biggest transaction usually of your life, then you could imagine that you might be a little bit more empowered, and you might be able to avoid some mistakes, and maybe even come up with a little money somehow. You might do some things right. Make sure that, hey, is my attorney doing everything that they're supposed to do? Is my agent doing everything that they're supposed to do? So, the idea is that as an informed consumer, you're going to have a more realistic expectation of what the experience should be like. And when you're buying real estate, surprises usually aren't that fun. Birthday surprises are fun, but you don't really want surprises when you're buying a house, right? And then so I think Jennifer asks, let's take a look. She says, is there a copy of the presentation you can send out? Definitely. Oh, thanks, Tracy, 8:53. So we're going to wrap it up here pretty much. Last shot for questions. So Jennifer, I think we probably have your email. We could send you a link of this. We're going to post a link of this meeting to our website, which is tret.pro, www.tret.pro. So we'll plan to have it somewhere there on the website. And yes, we will also, we should be able to send you a copy by email. I'll have to talk to Tracy on that one. But listen, I'm really pleased that you guys joined, and it's always great for me to be able to share this information. And if you guys need any help in purchasing real estate, feel free to give us a call. We are located at 430 Franklin Street, 2nd floor, downtown Schenectady, in the Urban Coworks building. I love this place. It's a brand new co-working office building. The only thing about it is all the door handles are metal, and so I've been getting zapped like crazy lately, and it's just miserable. But we have coffee, and it's a good place, so don't worry about getting zapped. And all right, I'm gonna get out of here before I make a fool of myself. So thank you guys so much, and you can again call us, email us. Our number is 518-545-4776, and have a great day. Thanks so much.
Thanks, Sam. Have a nice one.
All right, guys.